In 2018, one of Britain's most iconic car companies did something it had never done before. It went public on the London Stock Exchange, selling shares to the world at £19 each and inviting everyday investors to own a piece of the most glamorous name in motoring. The headlines were electric. Aston Martin, the car of James Bond, the car of kings and racing legends, was finally open to everyone. Analysts called it one of the most exciting IPOs of the decade. The company was valued at over £4 billion. Champagne was poured. The future looked golden. 8 years later, those same shares were trading at around 40 pence. The company had burned through billions, replaced its CEO multiple times, issued profit warning after profit warning, and accumulated over £1 billion in debt. The billionaire who swooped in to rescue it had poured his family's fortune into a brand that seemed to swallow money faster than its engines consumed fuel. A car that appeared in over 30 James Bond films, that sat in the garages of presidents and princes, that had been called the most beautiful automobile ever built, was teetering on the edge of collapse. So how does one of the most recognizable luxury brands on the planet end up in such a mess? Well, to understand where Aston Martin is today, you have to go back to where it all began. Because the truth is, Aston Martin has been in crisis before. In fact, this company has gone bankrupt so many times that financial ruin almost feels like part of its DNA. It starts in 1913 with two young men and a shared obsession with speed. Lionel Martin was a wealthy amateur racing driver with a talent for engines and an appetite for competition. Robert Bamford was an engineer with the technical skills to bring Martin's ambitions to life. The two men had been selling Singer cars together in London and had become close friends, bonded by their love of motorsport. Martin, in particular, had developed a habit of racing at a hill climb event in the Buckinghamshire countryside called Aston Clinton, a winding stretch of road where drivers competed to set the fastest time up the hill. He had raced there so often, won there so many times, that the place had become synonymous with his identity. So when the two men decided to go beyond selling other people's cars and build one of their own, the name came naturally. They called it Aston Martin. Their first workshop was a small garage on Henniker Mews in West London, and their first car was built by hand, part by part, over the course of 1914 and into 1915. But just as the machine was ready, the world was not. The First World War erupted and brought everything to a halt. Bamford was called to serve, the workshop went quiet, and the dream was put on ice. When the war ended and the two partners reunited, they threw themselves back into building cars with everything they had. The early Aston Martins were small, light, and devastatingly quick for their time, and Lionel Martin raced them personally, understanding that victory on the track was the most powerful advertisement a small car company could buy. But building racing cars by hand is an expensive business, and by 1925, the money had run out. The company went bankrupt for the first time. Martin and Bamford were finished. They walked away from the company they had built from nothing, and for a brief moment, it looked like Aston Martin might disappear entirely, just another forgotten name in the early history of the automobile. Then a man named Augustus Bertelli stepped in and bought the wreckage. Bertelli was an Italian-born engineer who had grown up in Britain and fallen completely in love with the idea of building the perfect sports car. He restructured the company, moved production to Feltham in Middlesex, and spent the next decade shaping Aston Martin into the racing force it would become known as. Under Bertelli, Aston Martin competed at Le Mans, the most grueling endurance race on Earth, year after year. They rarely won, but they always competed with honor, and slowly, the name began to carry a reputation for courage, craftsmanship, and a certain very British refusal to give up. Those early Bertelli cars, with their long bonnets and hand-built bodywork, established the visual language that Aston Martin would carry for generations. But racing is expensive, and once again by the late 1930s, the money was running thin. When the Second World War arrived, production stopped completely. By the time the war ended, the company was once again on its knees. It looked, for the second time in its history, like Aston Martin was finished. Then David Brown arrived, and everything changed. Brown was a Yorkshire industrialist who had built his family's gear-making business into a significant engineering empire. He was wealthy, sharp, and quietly passionate about cars. In 1947, he saw an advertisement in the Times newspaper offering Aston Martin for sale and picked up the phone. After a brief negotiation, he bought the company for £20,500. It is probably the greatest bargain in the history of the automobile industry. Brown brought with him capital, connections, and a vision. He hired talented engineers, invested in proper facilities, and crucially, he gave the cars a new identity. He called them the DB series, named after his own initials, and one by one, they became legends. The DB2, the DB3, the DB4, the DB5. Each one more beautiful than the last. Each one pushing further, going faster, winning more. By the 1950s, Aston Martin had become one of the most respected names in motorsport, culminating in their greatest triumph at the 1959 Le Mans 24 Hours, where they took outright victory and won the World Sports Car Championship. David Brown had taken a bankrupt shell and turned it into a world champion. But it was what happens next that truly made Aston Martin immortal. In 1964, a silver DB5 appeared on cinema screens around the world in a film called Goldfinger. Behind the wheel was Sean Connery as James Bond, and within minutes, the car had ejector seats, machine guns hidden behind the headlights, and a revolving number plate. It was the most glamorous product placement in history. Overnight, Aston Martin stopped being just a sports car company. It became a symbol, an idea. It became the car that the world's most dangerous, sophisticated, and desirable man chose to drive. You could not buy that kind of marketing, and for decades, you did not need to. Every new Bond film brought a new wave of desire. Every generation of young men grew up watching those movies and dreaming of the day they might own one. But here is the cruel irony at the heart of Aston Martin's story. The very thing that made the brand priceless made the business almost impossible to run profitably. Building handcrafted, low-volume luxury sports cars by hand in England is extraordinarily expensive. The margins are thin, the development costs are enormous, and the market is small. Every few years, the same problem would return. The money would run out. David Brown sold Aston Martin in 1972 to a company called Company Developments Limited. Within 2 years, the company had gone bankrupt again. A North American consortium stepped in. A few years later, another crisis. Then, another buyer. Through the 1970s and into the 1980s, Aston Martin changed hands repeatedly, lurching from one financial emergency to the next, always saved at the last moment by another wealthy enthusiast unwilling to let the name die. The most significant rescue came in 1987 when Ford Motor Company took an initial stake in Aston Martin, eventually acquiring full ownership by 1994. For the first time in its history, Aston Martin had the financial backing of a genuine automotive giant. Ford invested heavily in new facilities at Gaydon in Warwickshire and gave the company's engineers the resources to build something truly world-class. The result was a generation of cars that finally matched the legend. The Vanquish, the DB9, the Vantage. These were not just beautiful, they were technically accomplished, genuinely competitive, and more reliable than anything the company had made before. For a brief period in the early 2000s, it felt as though Aston Martin had finally solved its oldest problem. But Ford was under financial pressure of its own. In 2007, they sold Aston Martin to a consortium of private equity investors for £479 million. The new owners had ambitions to grow the company, but growth requires investment, and investment requires profit. And profit remained as elusive as ever. New models were developed, a four-door saloon called the Rapide, a £1 million hypercar called the 177, with only 77 ever made, a partnership with Mercedes-AMG that brought world-class engines into the lineup. The cars were spectacular. The business was still burning cash. By 2018, the new leadership believed they had found the answer. They would take Aston Martin public, raise hundreds of millions from stock market investors, and use that money to fund the next chapter. They pointed to a promising pipeline of new models, led by something that felt almost controversial for a sports car company, an SUV called the DBX. The logic was straightforward. Look at Lamborghini, they said. Look at Ferrari. Both had launched SUVs, and both had seen their profits explode. The luxury SUV market was where the real money was. The IPO was set. The price was £19 a share. The valuation was over £4 billion. And on October 3, 2018, Aston Martin floated on the London Stock Exchange. What followed was one of the most painful stock market stories in recent British corporate history. The shares fell almost immediately. By the end of 2018, they were already well below the IPO price. In 2019, the company issued a string of profit warnings. Production cuts were announced. Inventory was piling up at dealerships. The DBX, which was supposed to save the company, was delayed. CEO Andy Palmer had staked his credibility on a plan that required everything to go right, and nothing was going right. The share price continued to fall, and with it, the mood inside the company darkened. Suppliers grew nervous, investors grew furious. The bond market, which the company relied on for financing, began demanding higher and higher interest rates to lend Aston Martin money. It was a vicious cycle. The weaker the business looked, the more expensive it became to keep running it. And the more expensive it became to run, the weaker it looked. Then, in January 2020, a Canadian billionaire named Lawrence Stroll made his move. Stroll had made his fortune in fashion, building brands like Ralph Lauren and Tommy Hilfiger across Canada and Europe before selling his stakes for hundreds of millions. He had then invested in Formula One, buying the Racing Point team and installing his own son Lance as one of the drivers. He was a man who understood luxury brands, who understood motorsport, and who had deep pockets. He put together a consortium that invested £536 million into Aston Martin, took the role of executive chairman, and quickly replaced the CEO with Tobias Moers, a highly regarded German engineer from Mercedes-AMG. The plan Stroll unveiled was bold. Aston Martin would transform into a true ultra-luxury brand, competing directly with Ferrari and Lamborghini, rather than with Porsche and Bentley. Prices would rise sharply. Volume would be controlled carefully to protect exclusivity. The DBX would finally launch and attack the luxury SUV market. The Formula One team would be rebranded as Aston Martin for the 2021 season, giving the brand a global marketing platform worth hundreds of millions. Saudi Arabia's sovereign wealth fund and Chinese automaker Geely both took significant stakes, bringing fresh capital and powerful new allies. For a moment, it seemed to be working. The DBX launched to strong reviews. A higher performance version, the DBX 707, became the best-selling car in Aston Martin's history. New versions of the Vantage and DB12 were unveiled to widespread acclaim. The Formula One team improved dramatically in 2023, with Fernando Alonso driving to multiple podium finishes. The brand had never looked more visible or more relevant. But the numbers told a different story. Losses continued to mount year after year. In 2022, the company lost over £500 million. The debt pile grew past £1 billion. Stroll himself had reportedly invested close to £1 billion of his personal fortune into the company. CEO Moores departed and was replaced by Amedeo Felisa, Ferrari's former CEO, who was then himself replaced by Adrian Hallmark, a highly experienced luxury automotive executive, as the company continued searching for the right leadership. Every time profitability seemed within reach, another obstacle emerged. Supply chain disruptions, rising material costs, production bottlenecks at the Gaydon factory, the enormous expense of developing new models while simultaneously funding an F1 team, all of it combining into a financial storm that refused to pass. The share price, which had been £19 at IPO, was trading at around 60 to 80 pence by 2024. Investors who had believed in the dream in 2018 had seen more than 90% of their money evaporate. So what actually went wrong? Because Aston Martin did almost everything analysts said it should do. It launched an SUV, it raised its prices, it attracted powerful investors, it partnered with Mercedes for technology, it got back into Formula One. On paper, the strategy made sense. In practice, 3 deep structural problems kept dragging the company back. The first is that Aston Martin simply does not have the volume to fund its own ambitions. Ferrari sells around 13,000 cars a year and generates profit margins that most car companies can only dream of. Aston Martin sells around 6,000. Ferrari has spent decades investing in its own engines, its own technology, its own factories. Aston Martin has historically borrowed technology from partners, which means paying for it, and developing new models from scratch is staggeringly expensive when you are selling those numbers. The economics of ultra-luxury only work at scale if you also have deep profitability per car, and Aston Martin has historically struggled to achieve either. The second problem is the debt. Every crisis in the company's history required borrowing to survive, and each rescue loaded more weight onto the balance sheet. Servicing over £1 billion in debt while simultaneously trying to invest in new models and a Formula One team would challenge any company. For a business that has never consistently generated strong profits, it has at times looked almost impossible. The third problem is one that no business plan can easily fix. Aston Martin has spent over a century being saved at the last minute. That story, as romantic as it is, has conditioned investors, suppliers, and partners to expect the worst. Every profit warning reinforces the narrative. Every CEO change raises questions. The brand in the showroom is priceless. The brand on the stock market has become associated with disappointment. And yet, as this story has shown time and time again, Aston Martin has a habit of surviving. Every time this company has fallen, someone with a passion for what it represents has stepped in and refused to let it die. From Augustus Bertelli to David Brown to Lawrence Stroll, the pattern repeats. The cars are too beautiful, the name too powerful, the history too deep for the world to simply let it disappear. The DB12, launched in 2023, is by most accounts the best road car Aston Martin has ever built. The DBX 707 is genuinely competitive against the best luxury SUVs in the world. The technology partnership with Mercedes continues to provide world-class engines. Whether that is enough to finally break the cycle, to build a version of Aston Martin that is as financially strong as it is emotionally compelling, is the question that will be answered over the next few years. The company has until its next wave of new models, expected in the mid-2020s, to demonstrate that it can generate the profits its brand deserves. If it can, the story of Aston Martin's survival will be one of the greatest business turnarounds ever told. If it cannot, then the next buyer will be waiting, just as they always have been. Because one thing is certain, after more than a century of drama, disaster, and redemption, somewhere out there, there is always someone who loves Aston Martin too much to let it go. And that is both the company's greatest strength and its most dangerous weakness. Thanks for watching. If you enjoyed this video, make sure to subscribe and hit the notification bell so you never miss the next one. See you in the next video.